Bloomberg Audio Studios. Podcasts, radio, news.
I'm Stephen Carroll, and this is Here's Why, where we take one news story and explain it in just a few minutes with our experts here at Bloomberg.
Our goal with prediction markets is really to allow every person that has an opinion on something to find that market and that big event that they care about to be able to trade on.
The business of making a market and futures contracts tied to events is exploding.
Polymarket had 60% odds of this deal closing, the Netflix purchase, by the end of 2026.
Right.
After President Trump's comments, those odds plummeted to 23%.
And when you look at the Polymarket odds, you can see that betting markets have turned more dovish. Overall, the odds are highest at 25% for 3 Fed rate cuts in 2026.
Prediction markets give people the ability to bet on the outcome of almost anything, from what's going to happen to the economy to who'll win Best Actor at the Oscars. These platforms have exploded in popularity and now handle billions of dollars in bets every week. But regulation hasn't necessarily kept pace with their growth. Here's why prediction markets are the world's casino. Our digital finance reporter Emily Nicolle joins us now for more. Emily, good to talk to you. First of all, for the uninitiated, how do prediction platforms work?
Prediction markets are event contracts that typically have binary outcomes. So you mostly will buy a yes or a no based on a specific outcome to a question. So say it's, for example, who will win Best Actor at the Oscars. You could buy yes shares betting that it's going to be Kate Winslet, or you could buy no shares betting that it's going to be, I don't know, Robert Pattinson, whoever you want it to be, of the options that the platform exists anyway. And the price at which you can buy those shares is going to be anywhere between $0 and $1, and the amount, like what determines that price, is kind of the implied probability of everybody who's trying to buy or sell those shares. So it's not quite, if a majority are saying this or that, but basically the liquidity in the markets underneath them.
So who are the big players in these markets then, and why have they become so popular in recent months?
The 2 big platforms that we talk about now in prediction markets are known as Polymarket and Kalshi. They're both based in the US, so they do operate quite differently. Kalshi is a US regulated venue, whereas Polymarket operates offshore, though it will soon have a US regulated venue as well. They've become really big talking points in the last few months or even the last year, because while prediction markets have been around, I mean, if you think all the way back to the early 1900s with election betting, that's kind of one of the earliest examples we have. Prediction markets have been around for a while, but they weren't really key touch points until we started looking at the 2024 US presidential election, when people who were trading on Polymarket or Kalshi, you could see odds for Republican victories that just seemed very different to what polling data would tell you. They were predicting a Trump win long before polls suggested that was going to happen. And that's somewhere where then traders were looking for that kind of information, and ultimately they were proven right.
How are these prediction markets regulated then?
So for Kalshi, it's regulated as a CFTC derivatives exchange. So it's seen as the same way as if you were buying futures or options on commodities like Bitcoin or oil for someone like CME Group. It's regulated in much the same way. These are structured as financial derivatives contracts, and that's what enables them to not be viewed in the US anyway as the same as sports betting or gambling, which is overseen by the states. For Polymarket, it's a little bit different because it operates offshore. It settled with the CFTC in 2022 and promised to not serve US traders as part of that, and it will soon have a US regulated venue that operates in a similar way to Kalshi, but just for sports bets. So that's how it's regulated in the US. Elsewhere, it's a lot more tricky. We don't have clear regulation as we do in the US in kind of countries across Europe or even across Asia for prediction markets. But there are countries that have kind of come out and said, well, we think this might be gambling. So Polymarket, for example, was banned in countries like France last year over some of these issues, and that has delineated those as gambling in that sense.
Well, is it felt that there are risks then for the public with these platforms and these markets?
As with any high-risk investment, what you put in could always go down, and especially in something like crypto, which is what I write about most of the time, it's very common knowledge that if everything you put in could go to zero very quickly, and it's a high-risk bet. So in that sense, there is a risk, just the same as with gambling as well. There's always a risk. The difference, I guess, with prediction markets is that whereas in the sports betting world or the gambling world, you might have some level of consumer protections in place. Platforms are required to do things like not allow you to bet using credit, or they might have certain protections in place that say you can limit yourself from doing it more than a certain number of hours in a day or a certain number of times a week. That doesn't exist in prediction markets at all because it's seen as a financial product. And so there are different kinds of protections involved for consumers, but ultimately the risk in it is still the same.
Well, given then that it is being viewed as a financial product by regulators in certain parts of the world, how is the financial world responding to these markets?
They've been responding in a big way, actually. So Kalshi was also challenged by the CFTC over its contracts a couple of years ago, and it won that case last year, which is what enabled it to offer contracts tied to the presidential election at the end of the year. And because it won that case, that kind of opened up a huge set of precedents that financial firms could glom onto and say, well, we can offer these kinds of things too. So we've seen a bunch of different names come out and want to be offering prediction markets. Some of the highest profile ones are companies like Robinhood, which offers contracts to users, that some of which are kind of offered by Kalshi underneath, so it provides the tech while Robinhood is kind of the front end. But we also have some others also providing contracts too. So CME Group offers prediction markets contracts, and it's heavily expanding. We've even seen companies kind of get involved on the investment side as well. So ICE, which is the operator of the New York Stock Exchange, pledged to invest as much as $2 billion in Polymarket earlier this year, and they're also seeing great demand from their clients on wanting prediction markets technology in their products.
Well, seeing that rush of interest and rush of money into this area as well, what kind of predictions could we make about the future of these markets?
It definitely seems like it's set for like a really large amount of growth in the next few months or even a year anyway. So there is that side of things. I mean, if you think about all the investment that these financial firms are putting into it, is bound to be growing quite a bit bigger over the next few months. On the other hand, though, there is still a big legal battle, particularly in the US. So quite a few states have been challenging Kalshi in particular over whether or not it should be viewed as gambling and falling under sports betting rules, even if it has this kind of backstop of being CFTC regulated. That is a really big legal showdown that's happening at the minute. There are a number of lawsuits going on across quite a few states. And also the trade groups that represent the sports betting and casino groups are obviously not very happy about this either. So we're definitely going to see a lot more action happening there in the next year or so.
Well, plenty to watch then on future developments. Emily Nicolle, our digital finance reporter, thank you. For more explanations like this from our team of 3,000 journalists and analysts around the world, go to bloomberg.com/explainers. I'm Stephen Carroll. This is Here's Why. I'll be back next week with more. Thanks for listening.